Hey there, early people. Ugh. Boy, thank you for joining us on this fine Sunday. Thank you for tuning in early for this thing. If you've done these before, you know the drill. We like to get an idea of where everybody's watching from, so if you would be so kind, let us know your name and where you're watching from. We like to see cities across the world here, putting some time in on the weekend to learn how to make money in the markets. Right off the giddy up. Hey, Kieran from Houston, Mindy from Austin, Texas. We got two Texans. Quick to the draw. The Texans are quick to the draw. First in line, Indiana, Mark. Hey, Stefan from Germany. Moises, am I saying that right? From Florida. We got a nameless person from Baltimore, Maryland. Okay, welcome, Moises. It's good to have you here. Jersey has representation. Steven from San Diego. Man, I'm seriously thinking about moving to San Diego. Where is a place in San Diego that has affordable apartments? As much as I love living right next to Benzinga headquarters in Detroit, Michigan, San Diego is very attractive. And I'm not going to live there forever. Just want to try it out. Brussels, hey. Neil from Jamaica, welcome. All caps on the Jamaica. I love the enthusiasm behind that. We've got Fernando from Oklahoma. We've got Mode, I believe I'm saying that right, from Seattle, Oklahoma City. Hey, Anna from Alberta. Wonderful. Austin from Ontario. All right, so far we're not getting enough global coverage right now. I think my Scandinavians are being a little shy. I know there's at least one. What do we always get? We get Norway. I know there's a shy Scandinavian right now, just not sure. Just looking at the keyboard. The camera's zooming in very slowly. A little bit of trepidation. Come on. Nigeria! Dare, thanks for attending. It's good to have you here. Dwayne from North Carolina. Guilty. Guilty from Nova Scotia. Anthony from Cleveland, representing Cleveland. Argentina, yes. Santiago, it is great to have you here. So, as always, guys, if you registered for this event, that means you put your name in a thing, and put your email address, and signed up and registered. You're probably watching on Zoom right now. You will get a recording of this session afterward. You will get it. Nick from just outside Toronto. And we've got Massachusetts. Hey, Carol. Minnesota. Finally. Okay, Croatia. I'll take Croatia. How's the weather in Croatia right now, where you are? Orlando, Florida. Miguel, welcome, welcome. God, I want to go to Colorado too. Miguel, what is the coolest city in Colorado to live in? Denver? Okay. Illinois. It's 47 degrees and raining. It's pretty much the same thing in Detroit. Gil wants to know, when do we start and is oil breaking out? Sheesh. Come on, Gil. So we're going to start at 1 p.m. Eastern Time, New York. Is oil breaking out? I think oil already broke out. If you want to check, you can use the oil ETF, which I believe is XLE. Let me double check on that. Yeah, so if you use XLE, and Gianni, when he gets here, will probably confirm this. But XLE should have exploded from a downtrend into a pretty big uptrend. XLE oil in general was the strongest group, the strongest sector last week, if I'm not mistaken. But this session is about identifying stocks or ETFs if XLE is and ETFs are more your style. This is about identifying the patterns that lead into that breakout before it happens, so that you can actually capture the breakout and set a target price to sell at. So it's about developing a plan and capturing explosive moves. Got Dominican Republic representation from Juan. Raining right now in the southern part of Nigeria. Gianni's here.
Hi, Neil.
Hey, how's it going, man?
Good, man. How about you?
Wonderful, wonderful, wonderful. We're getting folks from all over the world here ready to learn with us today.
Cool. That's always the best.
Strong representation from Texas.
Tejas.
We
I've
just
actually
got
never been to
Alabama.
Texas. Can you believe that?
No, that's crazy.
My wife's grandfather lives in Texas, though. He lives by Longview, but I've never been to his place, so I've never been there.
Get out there. Get out
Yeah,
there. What is Longview by? Is that like north, south?
That's in East Texas, so closer to Louisiana.
Okay.
Yeah, I want to. So
Yeah, Texas is a big, very diverse place depending on which part of the state you're in.
Yeah.
There's a lot of different sides to the state.
Yeah. That's biggest one in continental U.S. So
yeah, I've heard it's a pretty big place, and can confirm it is a large state. And we just got another Houstonite.
Cool.
And we will get started in about 3 minutes. Someone asks Gianni, is oil breaking out?
It's close. It's very close. I mean, if oil can get above its 2018 highs, I think we're going to see oil in over $100 a barrel sooner than we know it. I'm kind of eyeing that for Q3, Q4 this year. I think we'll see $100 oil.
Wow.
Yeah, and it's I think a big part of it is just the dollar going down, inflation. I mean, it's not even so much as a demand thing; it's shortages and inflation. A falling dollar that tends to be inflationary.
Yeah, so there you go. Just a reminder, Gianni, and you'll pick this up during the presentation. Gianni is looking at the macro trends that are going on. He's looking at the fundamentals as well as the technicals here. So you're going to get a well-rounded perspective on how to approach stocks.
That's right.
Akash, thank you for being here from India.
It's funny. I went to high school with, he went to a neighboring school, but a young man from India whose name was Akash too. So how about that?
It's a cool name. I like the name Akash a lot.
Mississauga, New York.
Dula, Nigeria. Hey there. How long is the webinar? We tried to keep it to about 40 minutes to an hour.
It just depends how long I talk.
Just exactly.
And I can talk, believe me.
But now, I mean, this is a good opportunity. So make sure if you have questions, make sure that, here's my advice for you guys to get the most out of this session. Listen, because this session, we practiced this a lot. Gianni has a lot of practice with this presentation. He's shown it to a lot of people. The concepts and the lessons never change. The situation changes as time goes on. So the stocks that Gianni's going to talk about, the sectors he's going to talk about, the overarching themes are going to be what's happening today. Now, what I recommend is trust the presentation. Trust that Gianni is going to get to most of your questions. And if you do have questions, just make sure that you're kind to the other folks watching and keep those questions on the topic that we're actually discussing. And that's how you'll get the most out of this.
Same framework as Neil said, but with updated charts, because we all want to know what's going on now.
Yep. Also listen close because you're going to get some trade ideas too.
Yeah, I got a lot of the ones that I have prepared are actually like triggered in the last week. So
okay. Okay. So if you've already been following Gianni, then you already know.
Yeah.
Qatar. Welcome. No, we don't have a site that has all the previous webinars. Nope, you've got to register, and when you attend, we send you the webinars, and then if you subscribe, Gianni has a subscription that he developed with the Benzinga Breakout team that has a bunch of educational material, all of his research, all of the ways that he looks at charts with very easy to understand explanations that you get when you sign up.
Well, do these go on YouTube too as well, Neil?
Yep. So it's live streamed to YouTube, but those folks do not get the participation through chat with you, and they don't get the recordings afterwards. So you got to register to get the full breakout experience. Feely, how do you sign up? I can give you a link right now. Today there's a 30% off discount. I'll give you a coupon code too. And oh, hey, I feel like we're checking out bingo squares. We just got our first Dogecoin question from Melissa. Melissa, I want to thank you for breaking the seal on that. Oh, but they're coming in quick. What happened with Dogecoin?
I don't know. What happened with Dogecoin?
It just went down while Elon Musk was hosting SNL last night and in the early morning of today. But guys, it is hitting some key support down at the bottom. But you know what? Dogecoin is for traders, not for investors. That's my opinion. What do you think, Gianni?
I just pull up the chart. I mean, it's pretty bullish. Higher highs, higher lows, clean uptrend. A little bit of bearish divergence in price from the RSI indicator off this most recent high, which probably led to the pullback. Upside momentum running a bit short. But like you say, Neil, you very astutely point out, we did just tag a level of support that was former resistance today, actually. So, we could see some choppiness these next few sessions, which would be ideal. If we can consolidate near these highs, we'll probably see another leg higher through time.
Excellent. Very, very, very optimistic outlook on Dogecoin there for you guys. All right, guys. Now is the time where I go away and we let Gianni take center stage. So, Gianni, I'm going to stop sharing my screen because it looks like my convenient little countdown timer has stopped.
Okay. All right.
Have I been sharing? Oh, no, I'm stopping my share. Yeah, you're good to share now.
Okay, so let's go ahead and get this bad boy fired up. I did just see a comment from Lori celebrating her Mother's Day, gaining knowledge. So happy Mother's Day to all the mothers out there, present and not present. We appreciate all that you do. Today, I want to talk to you about how to trade breakout stocks. So to tell you a little bit about myself, I've been trading in the digital pits, if you will. I was unfortunate to never have had the opportunity to trade in the physical trading pits in places like Chicago or New York. And I just saw that Chicago is closing another one of their pits. So there might only be like one left. And then there's the one in New York and London as well. But anyways, I digress. I've been trading for about 10 years, and I spent about 6 of those 10 years in the financial services industry, worked pretty closely with the institutions during that time, your JP Morgans, your Goldman Sachs, your Vanguards, your Schwabs, your Fidelities, so on and so forth. Learn the tricks of the trade, learn the ropes from those guys through trial and error. Found their strengths and weaknesses and incorporated some of those strategies into my own. So much of what we talk about today incorporates that experience and that knowledge. And we want to focus on how to trade breakout stocks and to maximize our gains while minimizing our losses in the shortest amount of time possible. So some of the basic tools and concepts that we use to trade breakouts, the first and foremost being technical analysis. So we study price above all other indicators because price is the only thing that's going to pay you. So we had some questions about Dogecoin, and I know Elon Musk has been a major advocate for that. The way I trade, I don't care who's talking about it, what celebrity, public figure. The fundamentals are really marginal in terms of importance to me. I like to frequently show examples where a stock rallies with little to no earnings because the perception is more important than price. But we use technical analysis to spot opportunities ahead of time because history doesn't repeat, but it rhymes. And the best predictor, if you will, and I guess we should say forecaster is a more accurate term, of the future is the past. So technical analysis, if you go back and look at some of these price patterns, they're very plainly visible in charts from the late 19th century, the early 20th century, because human behavior doesn't change. Human nature doesn't change. Yes, we have different cultures and practices all around the world, and that's fantastic. However, at its core, human nature is pretty much the same wherever you go. Now, the next point might be the most important one, but I don't always like to put it first because it's not as fun to talk about, but it's risk management. So technical analysis helps us manage risk. It helps us quantify our entry points and quantify our exit points because as a trader, our number one priority is to cut our losses short and let our winners run. You have to view trading as a business if this is something that you want to get into for real. And every business has expenses. So you have to view your losses as expenses, and they're unavoidable. They're part of the game. Sometimes the stock will gap down 20% at the open. You can't do much about that. At that point, position sizing becomes paramount. So technical analysis helps us manage risk because a lot of times when we buy a breakout, we'll set a stop loss just below support. And a big principle that I want you to take away from today is that when resistance breaks, it becomes support. And when support breaks, it becomes resistance. And we'll take a little bit more of a look at what that might look like on some of the charts that I have prepared for you today. Now, I kind of alluded to this next point earlier, but the entire concept with technical analysis that's very important to understand is that we operate from the premise that sentiment follows price, not the other way around. So I use the most recent example pretty frequently of the Corona crash from last year because it was such a psychologically intense event for so many people. But you go back and look at the media articles of the state of affairs in the financial world and the world at large around March 2020, and it was pretty close to doomsday, right? The world was ending, we're going to be locked in our homes, so on and so forth. And that turned out to be the bottom in equity prices. So that just goes to show that sentiment follows price, not the other way around. It took until really late last summer for sentiment really to start to shift to lean bullish again. So again, that technical analysis helps us alleviate that typical human nature that we all exhibit. And lastly, technical analysis operates from a standpoint, at least with my philosophy as I approach it, that there's a natural order to our world. There are no coincidences in nature. Nothing in the market happens in a vacuum. What's happening in bonds will affect what's going on in stocks and will affect what's going on in commodities, so on and so forth. So capital is like matter from science class. It's never created or destroyed. It merely transfers from one asset class to another. And you might ask me, well, Gianni, what do you mean when a stock market crashes, all that money goes away? Well, not exactly. I mean, when a stock market crashes, what does that mean? It just means that the value of cash is that much more higher than the value of shares. So it helps to approach, markets on a relative basis in that regard. Okay, so let's talk about some chart patterns since, we went on a whole philosophical diatribe about technical analysis and it's important. The fundamental center or the core of technical analysis is the study of price. And so we look at price patterns to study price most effectively. And the good news about these price patterns is that they work the same across all different markets. So whether you're trading stocks, you're trading Forex, futures, crypto, bonds, whatever. I myself trade stocks and futures. I don't really trade that much crypto, to be honest with you. I do analyze it because people like to have it analyzed, but I don't really put most of my focus in trading crypto. There's plenty of opportunity for me, as I found, in stocks and futures. But there are three main types of patterns, two that we're going to focus on today. The one that's we're not going to focus on, I'll mention first. So those are reversal patterns. But today we're going to focus on continuation patterns and momentum patterns. And I will go ahead and list out those patterns for you that we're going to look at some examples of today. So the continuation patterns that we typically observe, we'll start off with the family of triangles, right? We have the ascending, descending, and symmetrical triangle. We have the rectangle pattern, and then the ascending and descending price channels. So the key to take away with continuation patterns that I would like you to remember is that it's self-evident. The key is in the word continuation. Continuation of what? The trend. The trend is your friend until the trend ends. So if you observe a continuation pattern on a stock or any type of market, and there's an uptrend, so if you spot a triangle pattern, well, is the stock or market making higher highs and higher lows? Yes or no? If so, then you can deduce to a higher degree of probability that a continuation of the trend may unfold. So that's why, and that's how we use continuation patterns to our advantage. The other one that I like to classify as momentum patterns, and there is some slight overlap, but these ones tend to be more powerful. You got the saucer pattern, the broadening wedge, which is one of my favorites, the cup and handle, the bull flag, and the rectangle has a lot of overlap, really depending on the length of the pattern itself. So let's take a look at some actual charts and examples that we have used in our service in the past. So all of these stocks I'm about to share with you, they may be daily or weekly charts. I'll do my best to announce that at the beginning of each slide. If I neglect to do so, just remind Neil, and Neil, feel free to interrupt me. But this is a weekly chart of Kara Therapeutics, and we have a saucer pattern on this chart. So this is something that we put out for subscribers. And a saucer is characterized by an upper horizontal trend line acting as resistance. So this trend line's a little high, might have it a little lower, but a lot of times you see zones of support or resistance rather than just a singular price. But the secondary portion of the pattern is characterized by a U-shaped parabola, and it's representative of a compression and volatility. And so the buy point occurs when a close above the upper horizontal trend line takes place. So we flashed a buy signal in this stock in mid to late March for subscribers. It shot up, had a huge earnings beat, if I'm not mistaken, but look how it crashed not long after. Fortunately, we got out of this stock. It doesn't always happen that way, and I'll show you some examples of us getting out too early too. So this is like, the artistic approach to technical analysis as well. We got out still with like a 27, 28% gain. We were up as much as around 40 at one point. But I share this with you because it shows the importance of managing risk. And even if you're up on a trade, you need to continue to manage risk. You can't get sloppy. You can't get lazy. One thing I like to do is whenever a stock that I have goes up, 12, 13% above my buy point, I move up the stop loss to break even. And then once we start getting 20, 30% higher, I start raising the stop loss to protect the bulk of those gains. So in this case, that's what happened. We were stopped out early before this move as a result of raising our stop losses to protect the bulk of our gains. And thankfully we did, because this would have been a pretty traumatic event to go through. And speaking from experience, I have gone through, moves like that where you're on the right side of the market, and then it just comes, the rug gets pulled out from under you not long after. So we did get out with a good profit, but I did want to show this for you today because it's of the saucer pattern.
Hey, Gianni.
Yeah.
It's me again. So once again, we have the time old question, and it comes up every time you show charts. Which question do you think it is?
I don't know.
Time frame.
Time frame.
So guys, every time I'll be this guy. Every time the chart is up, when Gianni is showing it, you can look at the top left. So Gianni, can you hover your pointer? you can look on the top left and it's spelled out. It's telling you what increment each candle is. So right now we're looking at CARA on the weekly.
Right.
So remember, you can always look up there. And then if you can't read it, because sometimes it's a little bit
Small. Yeah.
it's a little small and pixelated, ask. And then guys, whoever has the 4K monitor, be a friendly neighbor and help out your fellow traders. We trade together here. All right, thanks,
Yes.
Johnny.
Absolutely. Okay, so yeah, like I said, Neil, interrupt me. I made a point. I will do my best to mention the time frame, but if I don't, then interrupt me as needed.
I'm good at it. No problem.
Okay, this next one is LGI Homes. So let's take another look at a saucer pattern. This is a daily chart. So once again, we have an upper horizontal trend line acting as resistance. We want to buy on a close above that mark. The secondary portion of the pattern is a parabola U-shaped figure that is representative of a compression and volatility. And what I mean by that is notice how the trading range of this stock gets narrower and narrower up until prices break out. Now, this is one that we exited, I think it was Wednesday or Thursday, but then on Friday we ripped higher. So, I showed you a good example of a timely exit on the previous chart. This is one where I kind of wish I could take back because closing out at all-time highs, I think it is an all-time high on this stock. I'm only looking at the daily, but at a weekly high, nonetheless, is typically bullish price action. So, but again, the main reason why I wanted to show you this chart is to display a saucer pattern in live time. Okay, next we have a chart of Yeti, like the drink, like the mugs, Yeti, daily chart of Yeti. And this is something we currently own. And we have a broadening wedge, which once again is characterized by an upper horizontal trend line acting as resistance. But this time, the lower trend line is a descending trend line. Note how prices bounce off this level 1, 2, 3 times. The buy point is at a close above resistance, and that triggered in late April. So we're up in the early low to mid teens right now on this stock, and I think it goes higher. We're projecting prices on this one. Let's see, that's around 64. Yeah, probably around 95 at least, but probably higher at that point. But again, broadening wedge, upper horizontal trend line acting as resistance in a downward sloping lower trend line. Let's take another look at one. This is a weekly chart of Mattel, the toy maker. This is one we've actually been in. This is our longest active trade right now. And this is a weekly chart, as I mentioned, broadening wedge. You can make a case that this is actually more of a broadening bottom, but it's similar to a saucer and a rounding bottom. The broadening wedge and the broadening bottom really just depends on where the stock's at that given point in time. So, look at the length of this base. I want you to take away something from today. And it's a phrase that goes, the bigger the base, the higher the space, right? So this is a 2.5, almost 3-year broadening wedge or broadening bottom pattern, and prices broke out from that earlier this year. So we're up about 20% of this position. Looks like it's going to go higher. But the inverse of bigger the base, higher the base is the bigger the top, the bigger the drop. And we'll look at some examples of that too later on. A more recent pick that we have, this is a daily chart, and this is Wesco International, ticker WCC. So I'm pretty sure this is a tech company. Not exactly sure what they do. That escapes me right now, but we observe a cup and handle pattern. And this is a very powerful momentum pattern, actually made, famous by renowned trader and investor William J. O'Neill. He used to own Investor Business Daily, but I'm pretty sure they sold that off not long ago, if my memory serves me correctly. But this is a pattern that he made popular. You have an upper horizontal trend line acting as resistance, and essentially 2 saucers. So there's a bigger one, saucer, and that's the cut portion, right? So it's a U-shaped parabola again. The trading range is wider, and then the handle portion of the cup and handle pattern is a smaller, more narrow, not as wide as a trading range handle portion of the pattern. So it's basically 2 saucers, 2 parabolas. The secondary one is smaller than the first one. And so once again, the buy is on a close above the upper horizontal trend line. That was achieved earlier this week, and it gapped up and closed higher about 20% in as little as 2 days.
Hey, Johnny.
Yeah.
So we've got really good questions today.
Oh, great.
This is a great group.
Okay.
This might not be the best one for this, but there's two good questions. I'm going to start with the one that I think is very foundational. When you're looking at a chart, how do you decide where to draw horizontal lines?
So if we see prices rally to, are you like talking in terms of support or resistance or both?
Exactly. In both cases.
Okay, so you see how this upper trend line here, right? This horizontal one,
Mm-hmm.
prices came up against that. And I mentioned earlier, there can be zones too. So you could even drop this a little bit, a couple bucks, and it would be where my laser pointer is. You see how prices are constantly rejected by that level. So in order to draw a trend line, you need 2 points, right? But the more points there are on a trend line, the more important it is. So the greater the length of a level of support or resistance that breaks, the more significant it is. And the inverse is true, because I could even draw a horizontal level of support right across from my laser is, right here, right around this $80 mark. You see how prices came down into that zone, bounced off it, and rallied again. That's a level of support. The inverse is resistance. So resistance is a place where sellers usually come into the picture, whereas support is a place where buyers usually come into the picture. And you just have to see, are prices being rejected by a certain level on multiple occasions? And if so, can I actually draw a line to connect those points?
Excellent. And then the next question is, could you show a pattern and tell us how you calculate your sell target?
Sure. So on this cup and handle pattern, there's a couple things that I do in terms of calculating sell targets. So I'm a big believer in cutting your losses short and letting your winners run. So when a stock breaks out and rallies, I'll usually raise my stop loss and either let the market stop me out, or if I start to see some technical deterioration, then I might decide to get out early. But in terms of actually projecting prices, right? We have this cup and handle pattern, and one of the way to project prices from a particular price pattern, we'll focus on this cup and handle here, is you take the price level at resistance. So right here, let's say we're around, let's just round it up to 95 for simplicity's sake. It's a little bit lower, but let's keep it simple here. 95. And then we subtract that from the price level near the bottom of the pattern. So let's just say, keep it simple, around 75. The difference between 95 and 75 is 20. So what I'll do is I'll take that difference and I'll project it onto the level of resistance. So 95 plus 20 comes out to 115. That provides me with my upside price target from this cup and handle price pattern. So you can see we're not far from there now. We're only about $5-6 away. And that really comes down to, a personal preference at that point. Are you happy with the move? You ready to get out? Like I said, a lot of times I will raise my stop loss to protect a bulk of those gains. And because I'm okay with holding a stock that has done well for me, over the span of a couple of days or a couple of weeks to see if it can consolidate and digest those gains and find another leg higher. But sometimes people are happy, getting 20% and getting out right away. That's not so much my style.
Got it. And then I have three other really good questions.
Awesome.
I think you're going to answer most of them
Okay.
in the course of your presentation, but one of them I want to get to now. So we're looking at a WCC, and we see that the RSI is what's that at? About 79.41.
Yep.
So the question is, here, hold on. Now we're getting a lot of questions, so it's scrolled down on me. So can you tell folks how you read RSI?
Yeah, so RSI is one of those things now. Momentum indicators in general, not a lot of people know how to use them correctly. The best traders do very well. So, you can make a case. Now look here how the prices are consolidating within this pattern. You could make an argument, and it's not really an argument, it's a fact. There's some bearish divergence in price, right? So that is a sign that upside momentum is going to be capped in the short term. But note how when prices are consolidating within this pattern, the RSI is not falling into oversold territory. That speaks to the bullish momentum still being present on the stock. And the fact that we got another overbought reading is bullish. We want to see overbought readings on stocks that we're buying breakouts for. We want there to be an overwhelming number of buyers, right? If we're getting long, buyers raise the price of the stock, sellers drop the sell of the stock. So getting an overbought reading on an RSI indicator is good. Now, When you start to see very wide divergences going on for months at a time, that's more of a cautionary signal. But look how in this case, this bearish divergence was, not even 2 months long. So that's not really cause to abandon, one's long position
Mhm.
on any given market as a rule.
Yeah, and so yeah, probably a lot of you folks that are watching are thinking, when the stock gets above 70, it's overbought. When it gets below 30, that means it's oversold. And it usually means, overbought means it's about to go down, oversold means it's about to
Not
go
always
up.
true.
It's
Right.
not always the case here.
Right.
We're looking at momentum. So how
Exactly.
many buyers are rushing in? So that's what Gianni is researching for, and he's finding these specific situations. Okay, and then the next one is about gaps. It's really just a really specific question. What do you think about price gaps, and do they always get filled?
They do not always get filled, but it really just depends when and where the price gap happens. So this chart right here has an excellent price gap. This is called a bullish breakaway gap. So if you gap up higher and close well, the closing price is very important. This gap up from Thursday closed well. If it gapped up and closed out near the lows of the day, that's a gap that I probably would see get filled. Now, look at this gap here from earlier in February, a gap down but closed well off the lows of the day. That again speaks to the point I just made. This would have seemed to be like a gap that got filled, and it did. So breakaway gaps, not all gaps are created equal. Breakaway gaps above levels of support or resistance are more important than just, regular old gaps. I mean, let's see, is there another gap right here we can look at? Well, no, pretty much all the gaps on this chart, with the exception of this one in February, this did not represent a break of support or resistance, right? It was still within the support level from the previous month. So that's the nuance there. Is price gaps are more important when they break above resistance or below support. And, to Neil's point he mentioned earlier, what we're trying to look at here is buying high and selling higher. That's momentum, right? You don't have to buy low and sell high to make a good living trading. And I'm showing you multiple examples of that right here.
Okay, and then one last question is what is your rule of thumb for setting stop losses when you're entering breakouts?
Excellent question. Whoever posed that question is thinking the exact right way that they need to be a good trader, because risk management is so important. What I like to do is once I calculate my stated buy point, I typically will set my stop loss within 7 to 8% of that buy point. So if I set a stop loss, if I set a buy point at $10, I'll set my stop loss at like 90. What is that, like 930, 920, for example. And that's what I like to do. If you can cut your losses at around, between 7 to 10%, and your average winners, 30, 40%, you can afford to be right just 1 out of 4 times and still be profitable. I don't know about you, but those are odds that I'm going to take to the bank all day, every day.
Excellent. All right, let's carry on, guys, and keep the good questions coming. But remember, Gianni is probably going to answer it. So sometimes I might not get it right away because I know that Gianni's going to answer it on his own.
Yeah, those are all really good questions. You're right. No, this is a good group today. So we have this rectangle pattern here. The ticker symbol is NCR. This is a daily chart. And you see how, so look, prices were rejected by this level of resistance. 1, almost there, 2, 3, possibly even a 4th time. Support, same thing too. 1, 2, 3, 4 times. So those are very clean cut levels of support or resistance. We got long this stock in early April on a close above resistance, and we're up about 22% now. So here's an example of another gap to, revisit the question that just asked. This gapped up. And, we're still close enough to this previous level of resistance that might be the gap that associates with, but, we'll see we'll see where this tops out. Maybe it won't get filled. Maybe it will. But gaps, here's another thing I want to add. This is important. When you see a gap up, it represents an exceptional level of support. So since we got long here, for example, on the close above resistance, then we had the price gap up. I'm going to raise my stop loss up to that gap, because if we close below that gap, it's probably going to turn into a reversal or an island reversal of that sort. So gaps can also present you with an excellent opportunity to more effectively manage risk. But the reason I wanted to share this chart today was the rectangle continuation and or momentum. We see a trend of higher highs and higher lows, and then it goes sideways for about 3 to 4 months. Bigger the base, the higher the space. That's an exceptional length for a rectangle pattern, and we broke out and have continued higher since. Let's take a look at some of the family of triangles. We have a symmetrical triangle here. This is Sally Beauty Holdings. So we're seeing a lot of names in the consumer discretionary sector perk up, and I think that has a lot to do with all the stimulus. People are spending money, so on and so forth, possibly anticipating higher inflation expectations. That's another thing. I know I'm trying to buy some stuff ahead before prices rise, but that's how consumers tend to react when they expect inflation to rise. Inflation expectations are now at their highest levels since 2008. That is pretty remarkable, considering we spent about more than 10 years of monetary policy makers trying to stimulate inflation, and it seems like it's finally here. But the reason I want to share this graph today is for the symmetrical triangle. So we have an upper, lower, an upper downward sloping trend line, and then a upward sloping lower trend line. And what is the feature that we see here? A common theme that's recurring in these patterns: a compression of volatility. The trading range gets narrower and narrower until we close above a level of resistance. So this is a stock that we flashed a buy alert for earlier this week, or earlier last week rather, and we got long and they gapped up, and we're up about 20% on this one too. So it's looking good for Sally Beauty Holdings. This is another triangle pattern that I want to show. Ascending triangle. This has been a really big winner for us. BGFV. This is a daily chart. Big Five Sporting Goods. And this stock was up over 60%, almost 70% just this past week. So once again, we talked about how the triangle patterns are known as continuation patterns. So let's start off by identifying the trend. We see higher highs and higher lows. Each subsequent high is above the previous high, and each subsequent low is above the previous low. But this ascending triangle is characterized by an upper horizontal trend line acting as resistance. The secondary portion of the pattern is characterized by an upward sloping trend line off which prices bounce or are rejected a couple times. So, pretty close here where it would have started. Then we had a rejection here, here, and here where my laser pointer just was. We get long on a close above resistance, and that turned out to be an exceptional entry point. The stock rocketed higher this past week off a phenomenal earnings beat. Okay, let's take a look at an ascending price channel. Okay, so this is when stocks trade in range, and this is Targa Resources Corporation. This is an energy pipeline stock. It's a weekly chart, and you can see here how prices started trading within this range in late 2020. And as long as prices stay within this range, the stock is bullish, but sometimes they even break out above it, and that's what we think will probably happen on this one. We're up just under 10%, I think like 8 or 9% on this one right now. But, if we can clear this level of resistance that we're coming up at, which we're really starting to threaten, we could see a retest of the highs from 2018, which is something that we're banking on here. So you can see how we keep making higher highs in price as well as new highs in the RSI indicator. So as a rule, higher weekly closing highs are as bullish of price action as you're going to get. So it's looking good for energy, and we'll take a look at some of the other reasons why we like that sector right now too. All right, let's take a look at a bull flag, because whenever a trader spots a bull flag, it's hard to not get excited, because these are some of the most powerful technical patterns known in trading. And the reason behind that is that these patterns tend to have a high capacity for large gains in a short amount of time. So the first step in the establishment of the bull flag is the establishment of the flag pull. So you have an explosion of prices higher in a short amount of time. Prices will then go on to subsequently consolidate those gains, or better known as flagging, with respect to these patterns. So prices will bounce off support and resistance like they do here. You see that we're bouncing off support 1, 2, 3, 4 times. We tested resistance 1, 2, 3, 4 times before we finally closed above it. And that's what you want to do. You want to get long on a close above resistance. And it's admittedly been a little bit slow coming out of this bull flag. It's only up around 10%, but we still think it goes higher. So this is a bullish looking stock, keeps making higher highs, higher lows. And remember, as I said, the trend is your friend until the trend ends. Now, I'm sure you want to see an analysis of the S&P. look at look at this daily chart. I mean, we got some pretty nice patterns here, but a lot of channels. And I think that speaks to the market adage that a bull market climbs a wall of worry. It's good to see prices rising slowly, because when markets rally too fast, they tend to come down just as fast as well. So, we see 3 ascending price channels. We see a saucer pattern from, Q3, Q4 of 2020. And right now, we just closed it at an all-time high, highest weekly level in history. I think that the S&P has a price target around, I'd say between 4,400, 4,600. But this chart comes straight from the elite service that we provide, where we send out market updates and stock ideas up to 3 times per. Well, we do send it out 3 times per week, up to 3 picks per edition. But again, to touch on the gap questions, this chart comes straight from that report, and we had multiple bullish breakaway gaps in April, and then we had a gap down just last week. But note how we closed well off the lows of that gap down, and then we closed those gaps. Okay, but that again is a testament to what we stated. Gaps are more significant when they break levels of support or resistance. If the gap is not breaking a level of support or resistance, there's a good chance it gets filled. All right, so I'm sure you're asking yourselves now, well, that's fine and dandy. You shared with us all those price patterns, Gianni, but how do you find these? Well, we have a couple approaches that we are aware of, and there's one that we focus on above the other. So you have the bottom-up approach, where you just scan hundreds of charts a week and try to find themes, right? But I like to take the top-down approach. I do know some bottom-up analysts who are successful traders, but I like the top-down because I stated, the bigger the base, the higher the space. The trend is your friend, and the longer the trend, the more powerful it is. So if a long-term trend, a long-term level of support, a long-term level of resistance breaks, it's more significant. Okay, so we try to observe the broader trends and then narrow down and trying to find the opportunities within those secular trends. So we start off by looking at the macro picture, and we observe 4 main asset classes. And it's really a debate now whether crypto is its own asset class or if that falls into the currency sphere. I kind of lean with its own because, the sovereign currencies of the world, they don't use blockchain yet. So the composition of the market is a little bit different. So that's something I've been mulling over in my mind in recent months, especially as adoption of blockchain and crypto becomes more pertinent. But the main asset classes we watch: currencies, interest rates and or bonds, stocks, and commodities. And we mentioned earlier how nothing happens in a vacuum in the market. What's happening in the Forex market is going to have an impact on the bond market. What's happening in the bond market is going to have an impact on stocks and commodities, so on and so forth. But for the purposes of this webinar here today, we're going to assume that you are trading the US market only. So what are some of the strongest performing sectors? Well, this has changed because up until last summer, last fall, it was tech, communication, biotech. But we're starting to see leadership in the industrials, inflation sensitive sectors, value, banks are doing well, energy is doing well. So we're seeing a massive sector rotation. And we'll take a look at some of the repercussions, and we'll talk about some of the repercussions in the market behind that. But some of the strongest performing stocks, as many of you are aware, were Tesla, was Amazon, was Apple. Those aren't really the main leaders now anymore. So the leadership is evolving, it's changing, but that's part and parcel of a healthy bull market. We don't want to see strength, a relative strength isolated in certain sectors. We like to see broad participation in the market. And what we do is we search for relative strength. We want to find the strongest stocks within the strongest sectors, the stocks and sectors that are outperforming the market at large on rallies. So if the S&P goes up 10%, our preferred stock or preferred sector would be up 12, 15%. But if the S&P is down, our preferred stock or sector would only be down 5, 6%. That's an example of relative strength. So I always share this chart here because it's not a chart, it's a list. I always share this list here because it is very important for the next concept we want to introduce, which is ratio analysis. So we have the 11 spider ETFs. We have communications, XLC, consumer discretionary, XLY, consumer staples, XLP, energy, that's conventional, traditional energy, XLE, financials, XLF, healthcare, XLV, industrials, XLI, materials, XLB, real estate's XLRE, technologies, XLK, utilities is XLU. So we do that because we like to look at ratios. And we want to see how certain sectors of the market are performing against the S&P. But the first chart that I have here is the ratio between a growth index and a value index. And when this ratio is rising, it tells us that growth is outperforming value. But you'll notice that it started to change. And now we have a case of lower lows and lower highs. And we also observe, and I'll introduce this and talk about it more in the next slide, chart patterns still apply in ratio analysis. So we see a rounding top or an inverted saucer pattern here, and we broke through the lower horizontal trend line that was acting as support. And note how we mentioned before, when support breaks, it becomes resistance. Well, we broke below support in Q1, and we have since come back up and retested former support, now resistance, and the retest was successful. So this can carry with it major implications for, the potential leadership in the equity market at large. If this ratio continues to decline, it tells us that we're going to see sectors like banks, energy, outperform the market, and especially outperform stuff like biotech, technology,
Here, hold on,
communication.
Gianni, really quick. Sorry to
Yeah.
interrupt you. I think I'm seeing 1 or 2 people saying that the audio and video is frozen. Hey guys, in the chat, give me a 1 if the audio and video is good. Give me a 2 if it's bad.
Okay, looks like
we're getting a lot of 1s.
Yeah.
All right. So folks that gave us a 2, I don't know how you heard me, but go ahead and just close your Zoom window. Just close the whole thing and then go back to the email with the link and reopen it and rejoin us. If that doesn't work, I recommend restarting your computer. All right. Sorry about that, Gianni.
No, that's important, Neil. Thank you.
Yeah, no problem.
Okay, so as I mentioned, chart patterns still apply. Okay, so we introduced the 11 spider ETFs and why we like to use them with this particular method of technical analysis. So the ratio that we have here is XLE, the energy sector, against the S&P. We know, especially since crude oil prices suffered hyperdeflation last year and went negative, that energy was not the place to park money in the market. In fact, you would have been better off owning the SPY or XLE. And this ratio tells us that because it kept making lower lows and lower highs. It was in a clear downtrend. And what that told us is that money is flowing into the S&P over the XLE or energy sector. But that does appear to be changing. Note how we had a case of bullish divergence in price from the RSI indicator at the November lows. And since then, we made a higher high and we may have just made a higher low. So depending on the time frame, we could have a case of an uptrend established in this ratio. Now, I would feel a lot better about that position if we actually break above this rounding bottom pattern. So if we can if the ratio can close above resistance and even exceed this ratio's level from late 2019, I think we're going to really start to see the momentum in energy in terms of its outperformance accelerate against the rest of the market. I mean, I mentioned earlier, well, I think that was right before we started the webinar. Neil was said someone had a question on oil, if it was breaking out. And if oil can clear, I think oil's pretty much going to test the mid 70s, 74 to 76 bucks a barrel. But if that level clears, I think $85 is the next stop, but I wouldn't be surprised to see oil above $100 a barrel by the end of this year. That's kind of what we're seeing on the charts at this point in time.
So Gianni, a couple things. First one is Thomas very astutely pointed out, if you could go back 1 slide.
Yeah.
Looks like a head and shoulders.
Yes, it could be.
So yeah, very well could be
Could
this.
be.
This looks like it could be an inverted Head and Shoulders, which you
Correct.
see at the bottom of a chart when it's about to go up.
Yeah.
And then so folks, we are getting fancy here, ladies and gentlemen. So Gianni is not looking at one stock or one ETF. He's actually looking at a chart that is comparing oil to the S&P 500. So that is why the chart looks different. It has the green and red lines because what he's doing is showing how XLE, which is the oil index ETF, compares to the S&P 500, which is the broader market, to see if oil is starting to look stronger than the rest of the stocks out there. So then the question comes up: how do I do this on my chart, Gianni? I'm pretty sure for stock charts, did you just type in a ratio?
Yeah, so you type in one ETF or one stock or one holding, you put a colon and then the second one.
Excellent. And for the folks that are using Benzinga Pro or are using TradingView, it's you put the first holding and then you put a slash, a forward slash,
Okay.
and then the second one. All right.
Okay.
Thanks, Johnny.
Yep, sure thing. And perfectly restated, Neil. Thanks for that. Sometimes it helps to just hear a concept explained slightly differently from a different person, and then it clicks. So Neil gets it, which is always great to have.
Teamwork makes the dream work, right?
Yeah. Okay, so now it's crazy because a few months ago, this is the first chart that we would show for ratio analysis, and it's the ratio between the technology spider ETF over the SPY. And we showed this because it was the most significant trend in the market, right? Technology outperforming, absolutely dominating the market at large, software eating the world. You've probably heard that phrase. But that happened a lot during the 2010s, which was a decade of deflation. So when deflation is the prevailing macroeconomic environment, and that was also evidenced by yields, interest rates falling to their all-time lows into March 2020. But many companies pursue they pursue lean management or the increasing of profits by cutting expenses, and they do that with software, right? And so that was why so much money was pouring into the software world. But now it's a matter of is there a saturation in that space? And this ratio might be telling us that's the case. Now, I'm not saying that software is going away. It's not what I'm saying. That I'm just saying that the money might have been made in the short term. It's going to need some time to shake out some of the weak hands, to get rid of some of the excess. And the emerging trend that I'm apparently seeing in this ratio is the S&P outperforming technology. I mean, look, we broke below this rectangle. We came back up, made a lower high. Then we just made a lower low, and we just broke below this upward sloping trend line. Now, there's something I want you to take away from today, and it's very important. The breaking of a trend line does not mean the trend is over. When a upward or downward sloping trend line breaks, it means the rate of decline or the rate of ascent is going to change. So we're talking about rates. It's not going to rise, say for example, 10% every 3 months. It might only rise, 2% every 3 months. That's the rate, right? So that's what this is telling me. I mean, you even go back. One thing I like to say is when in doubt, zoom out. I wouldn't necessarily be, selling tech. I just might not be adding to tech. I mean, I have personally I started reducing my tech exposure coming into this year, and that, it hurt me a little bit in the short term. But sometimes it's one of those things. It's better to be late, better to be early than late, right? So I know a lot of the high flying momentum tech ETFs have taken it on the chin, but a 30% decline after rallying, 300% in a year is pretty standard with respect to technical analysis. So we also employ these strategies when it comes to stocks. So we will want to see how a particular stock is outperforming against the S&P, to decide whether it's worth getting long that stock, right? So I shared a stock earlier, Targa Resources, ticker symbol TRGP. That's something that we got long a couple weeks back. It's an energy pipeline stock, and we see how it emerged from a rounding bottom here. Ratio keeps making higher highs and higher lows, and we successfully retested former resistance, now support. So we just took out the previous high So this tells me that this stock could be poised to outperform the S&P at large. So a couple other things that we use, we don't just use price patterns. We look for signs of accumulation. As breakout buyers, we want there to be more buyers than sellers. So trading volume, as many of you probably know, represents the amount of shares traded within a given time frame. If we are buying breakouts, we want there to be more buyers than sellers. So we like to look at the 20-period exponential moving average. So if we're looking at a weekly chart, you may have noticed a little red line on the volume bars. That's the 20-week exponential moving average. It's the 20-day exponential moving average on the daily chart. And so when we see volume start to trend above that line, it tells us that significant accumulation or distribution could be taking place. Now, let's talk about timing the breakout. And I'm going to give you an example. We'll analyze Ethereum because that's the hot crypto right now. We only have a few slides left, and I know Neil has some information to share with you. But we want to know how to time breakouts, right? Because timing the breakout helps you effectively manage risk, which we've said multiple times already is very important with respect to trading and technical analysis, because time is not money. Time is finite. In this fiat monetary system, there's an unlimited amount of money. It's important to have that mindset of abundance too. You know, you can't get heartbroken because you missed one trade. There's always going to be another opportunity out there. Time is more important than money. An improperly timed purchase of a breakout can skew your risk reward ratio. And so we want to trade at the end of the day as much as we can. If you can trade at 3:59 p.m., that's the most ideal time to trade. But in all reality, not everyone can do that all the time. But we want to avoid being whipsawed out of a position. So if a stock trades above a level of resistance during the day, but closes back down below it, sometimes it can turn into a case of a false breakout. And from false moves come fast moves. You don't want to get caught holding the bag on a stock that just topped out instead of breaking out. And so an upside breakout occurs when a market closes at a new high above a level of resistance or above the previous highest closing high. And we're going to focus on that definition right there for the purposes of this webinar, because we're talking about breakouts. The inverse is true with respect to breakdowns. But another key takeaway, and I mentioned this earlier, there can be different breakout price points. Well, I alluded to this earlier. I didn't explicitly mention it. But there can be different breakout price points for different time points. So a breakout on the weekly scale may not be a breakout on the daily scale. I should say it should be the inverse. A breakout on the daily time scale will not always be a breakout on the weekly time scale. A breakout on the weekly or the monthly time scale is much more significant than a breakout on a 15-minute chart, for example. Okay, so let's take a look at Ethereum, because we've been analyzing this cryptocurrency for months now. These are my notes from last summer continuing, and I always share this chart and we update it with the notes on each monthly webinar. So we started off back in June, July of last year. We identified an ascending triangle. What we do is once we identify a price pattern, either a continuation or a momentum pattern, we look within the pattern and see what the highest closing price within that pattern is. So we see back in this pattern, the highest previous closing high was in late May, actually, and it was at 248.44. So we can say, as fans of keeping it simple, let's get long on a close above 250. And that happened. We closed above 250 on July 22nd. Then we ran up higher and started to trade sideways for about 3 months, built another base. And we noted that the highest closing high within this saucer pattern was at 475.99. Well, we closed above that. We closed above 476 on November 12th. Prices then continued higher. We did get a little cautious at the beginning of the year. We sold, but we didn't really miss out that much. Do you want to be right or do you want to make money? I care more about the latter. I don't really care about being right. I change my mind all the time when I trade. But I do it according to price. So I'll have a position. If a price closes above support or resistance at that point, then I'll update my thesis accordingly. You can't be rigid in your approach to the market. But in this ascending triangle, upper horizontal trend line acting as resistance, ascending lower portion of the pattern, trend line, we got long on a close above 13.95 because the highest closing price within this ascending triangle was 13.92. And then we developed another saucer pattern. It's kind of interesting how we had a pattern of ascending triangle saucer, ascending triangle saucer, and now we're in a channel. But within this the recent saucer, the highest closing price was at 1957.47. So let's say, hey, let's just get long on a close above 1958. We were sharing that in the main webinar. That was achieved on April 1st. And that turned out to be a pretty good entry point because prices have pretty much doubled since then. So we had an upside price target on Ethereum initially at 2,500. That was achieved relatively quickly. It was then updated to 3,300, 3,500. We've now exceeded that mark. So it's rising within the channel. As long as it rises within the channel, it'll continue to trend higher. But I don't know if it's worth aggressively adding to long positions at this point. It's a good idea, I think, to keep holding if you own and just keep raising your stop loss. Always know what your risk tolerance is. So with that being said, I think Neil wants to tell you a little bit about our breakout opportunity letter. I do have like one more slide after this to tell you a little bit about how to keep learning, some books, some good ideas for online resources, so on and so forth. But let me pass off the torch to Neil real quick, have him tell you a little bit about the breakout opportunity letter and what we got going on there.
Yeah, we already got a couple questions. So one person asked, does the coupon code apply to Benzinga Basic or Essential 2? No, because what you were asking about is Benzinga Pro. Benzinga Pro is software. That is a tool that is completely separate from this. What we're talking about is Benzinga Breakout. Benzinga Breakout is a subscription service where via text, email, and a members only website, you're able to get Gianni's trades, his research, and his explanations along with ongoing education. So the idea is that while Gianni is trading, we are trading along with him, and we're learning or earning while we're learning. It's a fantastic service, and it is 30% off. It is an annual subscription. So when you see that number, it comes to $67.90 per year, down from $97 per year. So that's simply put, the most affordable option out there. The closest comparison you're going to see is going to be Motley Fool, which is going to give you one pick a month at about $100. So you're getting 30% off, $67.90 for the entire year, and it stays. The 30% off coupon applies forever for the lifetime of your subscription. And you're going to get all of that stuff. Are you likely to offer this for EU, UK markets? Not at this time. However, I would say that if you are in the European Union or you're in the UK specifically, most folks are mostly interested in what's happening in US markets. We have the volume, we have the most interesting companies, and the most companies, period. So it's simply put, it's where the most opportunities are. And so it's kind of an obvious choice for us to focus on US markets. And if you are in another country, you should be able to trade US markets using an application like eToro, or any number of other brokerages that give you access to US markets. Ram says, sure, but we can't trade in US shares. Yes, you can. Yes, you can. You just need the right broker to allow you to do that. I would recommend, if you're in the European Union, I would recommend eToro. That's a very easy application to use. It's very similar to Robinhood. It will also give you access to cryptocurrency. So there's that. The discount. Okay, so I'm being asked to share the link. Let me do that again really quick. Dropping it in Zoom chat now. What about the broker in Canada? Even easier. You can use, I'm pretty sure there's a Thinkorswim Canadian version. And these trades are swing trades. So that's a really good question. What type of trades are these? We're looking for opportunities that you don't have to stare at the computer all day for. Swing trading rules. It's my favorite type of trading. I'm pretty sure it's Gianni's too. Also, guys, just a note, Rodrigo is here. He's in the chat. We're dropping his information. Rodrigo is the customer success manager for Benzinga Breakout. He's your man on the inside. He will get you hooked up. He will explain how it all works and make sure that you have the best possible experience. And just so you know, there is, of course, a 2-week money back guarantee. So you can treat it like a trial. trial it out. I recommend getting at least the first and second tier so that you can get as many trade ideas as possible so you can see if it works for you. I guarantee you're going to like it. And if you don't, Rodrigo will give you all your money back. No problem. So, oh, I don't think Thinkorswim is offering in Canada now. Yeah, actually, I don't really know, but I mean, we have tons of Canadian traders. All you have to do is Google brokerage Canada that lets me trade U.S. stocks. Is it always longs? Yes. Okay, guys. So what I'm gonna do is give you the link and uh, stop here. So the coupon code is get breakouts 30. Get breakouts 30. And if you are already subscribed to another Benzinga premium idea service like options, I just got Greg saying that Gregory saying that he is on the option starter. Yes, you log in with the same account. It's the same account across all of them. If you want to add Gianni's breakouts, I highly recommend it. That is a great way to approach it because you're going to get completely different picks and completely different strategies, and you're going to find out which one you like. I use all of them because I work here and I get to do it for free. So how much is the second level? So guys, I'm going to get into all that stuff, but first I know that one of you asked about the spider sector ETFs. Gianni, you have a list of all the ETFs, right?
Yeah.
Did you share that already?
Yeah. I can scroll back.
Yeah. Let's go back, and I just want to make sure everyone can see this. So a lot of you guys were asking about like how to do the ratio when you're comparing the relative strength of a sector against SPY. Look at this group of indexes. So write this down, screen cap it, or if you're registered, wait for that recording, which will be conveniently delivered to your email. Yes, it works for options too, but that's not how Gianni rolls. All right, guys. So Gianni, I'm gonna let you keep going, and then I'll let you go back to your Sunday, and then I'll stick around with folks to answer questions because we're already at 2 p.m. here.
Very good. Okay. Well, the topic that I love to finish with is how to keep learning, right? So, I've been in this game for about 10 years now. I'm definitely not a newbie on the block, but I like to consider myself forever a student of the markets. You have to stay learning. So there are multiple free online resources out there. You can learn a lot of stuff on technical analysis. But the books have really changed the game for me. You have Technical Analysis of Stock Trends by Edwards and McGee. That was written in the early 20th century and pretty much the equivalent of a Bible when it comes to technical analysis. And then you have Technical Analysis of Financial Markets by John Murphy, Intermarket Analysis by John Murphy, How to Make Money in Stocks by William J. O'Neill, and then the ultimate book on stock market timing by Raymond Merriman. And then as we mentioned, and as Neil mentioned, you have the Benzinga Opportunity Series, actionable trade ideas you get to earn while you learn. We want to educate you, teach you how to trade and look at the market like we do, and to maximize your potential to make money and while minimize your potential for losses. So that takes care of everything that I had to say for today, Neil. So thanks again.
All right, Gianni, thank you very much. Can you copy and paste the book list into chat?
Yes, I will type those in.
Okay, thanks. Yeah, we always get people asking for the books, and they're great. So here's what I'll say about the books while Gianni gets those in. When you look them up on Amazon, they're gonna be expensive. Those books are like, when you look them up, they're usually like $60 to $100. So
yeah, the price of those have gone up quite a bit. So I bought all those like 6-7 years ago, maybe even like 8 years ago, and they were not that expensive. That's I think there's a lot of demand for them now.
We see this at Benzinga. People are increasingly going into technical analysis.
Yep.
So the books I recommend, if you're looking at on Amazon, you want to buy them, try to get them used. Try to look for sellers that sell the used versions. But also know, like, it's like, don't buy them all at once because they're big books in a lot of cases and they're pretty dense. Buy one at a time. That's my recommendation because even just one of these can really change the way you look at the markets. So I'd recommend that. And I also, guys, recommend try out Benzinga Breakout with Gianni because that is where you're going to get all of the lessons from the books delivered to you, but with actual trades. So it's a sweet deal. Are there continuing webinars with Gianni? Yes. If you sign up, you will get regular webinars with Gianni. All right, Gianni, thank you very much for being here today. I'm going to let you get back to your Sunday, man.
Thanks, Neil. Enjoy the rest of yours.
Thanks, man. All right, guys. Like I said, I'm going to stick around for about 5 minutes to answer questions about the subscription service. Yep, thick with 2 C's. These books. Books, guys. Wait, did he type it? He might not have typed it to everyone. Let me double check. Sorry about that. He might have typed it just to me. Guys, and any additional questions that I don't answer, you can reach out to our customer success manager, Rodrigo, with. That's what he's here for. Shoot, I lost the list, but you know what? I can get it for you. I'm looking them up right now. So it's John Murphy, technical analysis of financial markets. I'm dropping the Amazon link. Boom, there's one. Oh, it's Edwards and McGee, I believe, is the second one. Honestly, guys, that's going to be like enough of a start. Technical analysis. What is it? Technical analysis of stock trends by Edwards and McGee. Dropping that Amazon link. Yeah, it's $67 for a year. It's all annual. So I mean, if it's it's $67.90, was basically $68. Divide that by 12. I mean, that comes out to $5.67 a month. So that's pretty affordable. And then for the price structure of each subscription, as you click through that, you're going to notice that each subscription is followed by another one. That's how you go up through the tiers. The first one is going to be monthly, and it's going to be the starter. It's the absolute easiest one. I recommend starting with at least that and the second one. Here's a breakdown of the pricing. I just put it in Zoom chat. And then once again, here's the coupon code and the link. Do we run actions on Benzinga software? I don't know what that means, but no. You do not need Benzinga software for this, and Gianni does not use Benzinga software to do his technical analysis. He just uses a charting tool. Yes, it renews automatically every year. So the additional $47 one-time fee is a completely separate product that gives you daily updates from the Benzinga news desk. Completely optional. Oh, is it William J. O'Neill book? Okay, thank you. I mean, anything by William J. O'Neill is going to be good, but it's for sure How to Make Money in Stocks is the book there, and I'm going to drop the Amazon link for that. Thank you for calling that out there, Thomas. Edwards and McGee, John Murphy, and William J. O'Neill are like that's an amazing start to understanding technical analysis. Really appreciate it, Thomas. I highly recommend getting Benzinga Breakout Tier 1 and 2. So when you make the first purchase, you'll see another page that will say click here to add Tier 2. It's also called like weekly picks. Add that. And then you'll get a total of 6 picks a month with all the research and all that kind of stuff. That's enough to start. If you're more aggressive and you want to get the deal right now for 35% off, then grab the third one too. Grab Elite right now, and that will get you to about 18 trades per month, which is a lot of shots on goal, really. Yes, there's a saving if you sign up for all the services, but it's 30% applied now, and then that will go away. All right, guys, and I'm going to drop really quick. Rodrigo dropped a nice message letting you know you can reach out to him by email and by phone. I'm just gonna paste that and drop that again to let you know you can do that. So where to pay today on the website? that I'm giving you, the link to the link I'm giving you takes you right to the website so you can pay. Ah, Raymond Merriman. Okay, you guys are awesome. Tom, you're incredible. Wow. Yeah, Tom, you're killing it. And yeah, definitely try to get a used version of the books if you can. I think they're expensive even on like the Kindle version. KK, reach out to Rodrigo. Rodrigo will help you out. You can see his email and phone number in chat. Okay, guys. Yeah, Rodrigo. Rodrigo just put a message about tier 3. He said tier 3 includes videos of indexes along with portfolio updates. And he says message him for more info. So I'm going to drop that in. Okay, guys, and if you're registered for this, watch your inbox. Really shortly, you're going to get an email. If you're watching in Zoom, you're going to get an email with a webinar recording. All right, I want to get back to my Sunday. I want to go see my mom. I'm going to go see my mom and answer all her questions about Dogecoin. I really appreciate you guys taking the time to learn on the weekend. It pays off. It really does. If you work hard and you keep listening to people that are not full of baloney, it pays off. So thanks, guys. Happy Mother's Day to everyone. Any of the moms that are watching, thank you so much for raising us and being wonderful. Tom, you want a Benzinga partnership? Message Rodrigo about it, and we'll see about that. We'll see if we can hook you up with a partnership. You can be our chief book officer. All right, see you guys. Happy trading. I'm going to let the stream run just a little bit, but I'm going to take my headset off, so I will not be seeing anything. I'm going to walk away, but I'm going to leave the stream running so that you guys still have that link. And then if you want the recording, just stay tuned. You'll get it in your email inbox. Thanks, guys. Okay, okay. What you pulled me back in to read Rodrigo's email and number. Rodrigo is your customer success manager. He is the man on the inside that is there to make sure that you succeed with Benzinga Breakout. Rodrigo's email is rodrigocerda@benzinga.com. ROD as in David, RIG as in Gregory, OC as in Cameron, E as in Erica, RD as in David, A at benzinga.com, or you can call him direct at 313-284-4235. Again, that phone number for Rodrigo is 313-284-4235. Rodrigo is a trader. Rodrigo trades. He's like me. He works at Benzinga, so he gets all these for free too. We both trade all of these, so he can tell you from experience anything about the product you want to hear. So guys, I hope you got everything that you need. Anything else, Rodrigo is your man. So anyways, all right. Happy Mother's Day. Bye. Happy weekend. Bye.